Wait. Before you panic, before you hit sell, before you convince yourself that it's over, just stop and breathe. What we witnessed in the market wasn't chaos, it was strategy. It wasn't emotion, it was execution. And if you don't understand the game, you become the target of it. A Bitcoin wallet from 2011, silent for 14 years, suddenly moved 10,000 BTC. Back then, those coins were bought for just 0.78 TETH each, a total investment of around $7,800. Today, those same coins are worth over $1 billion. When that wallet moved, it sent shockwaves, not just through charts, but through minds. Fear spread instantly. If someone who held from pennies is moving now, is this the top? And that fear did exactly what it was designed to do. Bitcoin didn't just drop randomly, it was shaken. It fell from around $104,000 down to the 98K range, liquidating over-leveraged traders, wiping weak hands, and fueling panic across retail. People stared at red screens. Influencers went silent. Telegram groups filled with fear, and the market felt like deja vu. That same stomach-twisting panic we saw during the October crash. Some froze, some sold, some broke. But the smart money didn't flinch. And here is the part most don't notice. Bitcoin fell from 104K to 98K after the 10,000 BTC movement triggered panic. But institutions quietly bought the dip and pushed it right back above 107K, a textbook liquidation and accumulation cycle. Think about that. Retail cried, institutions accumulated. Fear-driven selling by the crowd, strategic buying by the powerful. This isn't a crash. This is a transfer of wealth from emotional hands to disciplined hands. And while everyone screamed end of bull market, Bitcoin quietly climbed back above $107,000. The same players who shook you out are smiling, while many who panic sold are now watching the market recover without them. This is not market collapse. This is market psychology. Meanwhile, altcoins continued bleeding. Because altcoins break first. Bitcoin, Ethereum, Solana, they didn't break, they bent. And assets that bend but don't break, those are the ones institutions accumulate, not abandon. You waited 4 years for this cycle. 4 years of headlines, halvings, ETFs, inflation drama, predictions, dreams, and now, right before the real move, they want you tired. They want you emotional. They want you to think the bull run isn't coming. Because tired investors sell cheap, and cheap Bitcoin is how rich hands build empires. Yes, you're frustrated. Yes, the market looks brutal. Yes, predictions failed. But markets don't reward emotion. They reward endurance. Weak hands exit here. Strong hands get rewarded later. Every bull market in history is paved with moments exactly like this. Hopeless, ugly, emotional moments that separate believers from quitters. This is not the time to dump strong assets out of fear. Not when the pattern is this obvious. Not when institutions are buying what you're being pressured to sell. You don't leave the battlefield one step before victory. You don't walk away because the final test felt too heavy. Wealth isn't built when it's easy. It's built when your conviction is tested. So stay calm, stay strategic. Zoom out. Remember why you entered this market. If you're still here, still believing, still holding your conviction through the storm, drop "I hold strong" in the comments. Panic is temporary. Manipulation is temporary. But conviction builds legends. And when the dust settles, the ones who stayed will look back and say, that was the moment everything changed.